The real estate data is telling an increasingly strong story for apartment markets across Australia. Apartments, which for so long have been considered inferior to houses on land for investment solidity and long-term capital growth, are mounting a serious challenge to the supremacy of houses in the minds of Australian investors. In recent times, apartments have proved competitive with houses on capital growth, and apartments are outperforming houses on rental growth. More and more Australians are opting to live in units and townhouses for their lifestyle and their affordability features. And apartments are grabbing an increasing share of the construction market with builders and developers. Among the growing pile of data charting the rising performance of apartment markets is Hotspotting's recent analysis of prices nationwide for the next edition of the Price Predictor Index. There are numerous instances in the major capital cities of suburbs where the median price for houses has dropped in the latest quarter, but the median price for apartments has risen. Now, Brisbane provides a good example. There are many dozens of examples of suburbs with recent price decline for houses, but rising prices for the more affordable unit options in the same suburb. In the popular western suburb of Indooroopilly, the median house price fell slightly to 1.39 million in the most recent quarter, but the median unit price rose 3.8% to 575,000. In the suburb of Hawthorn, the median house price fell 2.1% to 1.8 million, while the median unit price rose 16% to 695,000. And in Bayside Wynnum, the house median dropped 2.1% to 950,000, while the unit median rose 3.1% to 590,000. And there are many other similar examples throughout that market. Now, in each case, the price disparity between houses and units helps to explain the rising demand for units and the upward pressure on prices for units. Meanwhile, a severe shortage of apartment rental supply could lift rents a further 13% in some inner city suburbs next year as demand rises further, according to an analysis by major property company CBRE. It says an estimated 570,000 new apartments are needed over the next 3 years across Australia's capital cities, but only 55,000 apartments are currently being built each year, according to Samir Chopra, who is CBRE's Pacific Head of Research. Now, he says this significant mismatch between apartment supply and demand will help drive continued rental growth in key city centre areas. We won't see 30% rental growth as we've seen in the past year, he says, but we'll still see close to 10% rises because demand continues to outpace supply. Rental demand is expected to climb by about 34,000 across Sydney next year, fueled by strong population growth, but only 15,300 apartments are available, according to the CBRE estimates. In Melbourne, the rental market will be short by about 24,000 apartments, in Brisbane by 12,000, in Perth by 10,500, and in Adelaide by 4,100. And Chopra says some precincts will see larger population growth than others, with vacancy issues to be most acute in the inner city, major city centres and associated near city suburbs. He says that in most precincts around Australia, CBRE expects to see vacancy rates in apartments contracting by between 0.2% and 0.5% in the next 12 months. And this comes at a time when 80% of precincts have a vacancy rate below 1.5%. Sydney's inner west, where rents will rise 13%, they think, and North East Brisbane, which they expect to rise 10%, they're predicted to be the leaders in rental increases as a result of these tight vacancies.